Thanks, Wendy. Before I describe this slide, I just want to say there may not be time for Q&A at the very end. So I mentioned to Wendy, if you want two options, send questions to Wendy, and within 48 hours, she'll relay them to me and I will answer them. Also, you can directly email me. It was on the first slide, but it's gcokins@GaryCokins.com. Feel free to invite me in LinkedIn as well. So who will benefit from this presentation? Managers who have previously struggled at promoting financial planning and analysis, corporate performance management, and integrating business analytics into their decision support systems. Managers who want to prepare for the impact of artificial intelligence and robotic process automation on the accounting functions. And managers who intend to champion any or all corporate performance management, business analytic improvement techniques, and they need a compelling call to action. And the reason I have champion in quotation marks is because it's been my observation that although it's nice to have senior executives sponsor new initiatives and innovation, often they are preoccupied with firefighting and short-term priorities. It's typically managers 1, 2, 3 levels down in the organization chart who kind of have passion or fire in the belly and ask themselves, how long do we want our organization to continue to perpetuate using stale and arcane methods? And they're the ones that will do a pilot or a proof of concept and demonstrate to their coworkers, this is the way to go. Also, I also know that many of you are from the IT side of the house. You may not be the accountants. In fact, accounting may be outside your comfort zone. Feel free when this is done and you get the slides to share them maybe with the accountants over in the other room. You're going to find out sooner or later in this presentation. My belief is many of the accountants were in the 1960s. We've got to get them into the 21st century. So let's continue. I always like to start with this cartoon, drowning in data, but starving for information. I think it sets the stage for this entire talk. You've got this poor beleaguered clerk, shoulders hunched, sad, paper all around him. And the supervisor in the doorway to the left is asking him, looks like you've got all the data. What is the holdup? You know, I gave you the request. Why don't you have the answer this afternoon? And the issue here is there's a big difference between data and information. You convert data into information. We'll get to that in a few minutes. So my agenda is I'm first going to give an overview of the various stages of analytics. And also, I know this is going to be about the digital revolution, but we need to first prepare about this whole role of analytics, business analytics, data science, and then we'll get into the revolution. Then I'm going to basically try to define what is business analytics all about? Why do we have interest in it? I'm going to give a few examples, both for the accounting profession as well as just in general. Then we'll talk about this digital revolution, the opportunities and threats. Those are the threats from artificial intelligence and robotic process automation, machine learning. I then have 5 impacts, but they're very lengthy. And the slides will be from an article that I have authored, so I'm not going to read through them, but you'll be able to read through the slides. There'll be content when you receive the PDF of the presentation. Then I'm going to give those examples of it specific to the CFO and accounting function, and I'll wrap up with the benefits and summary. So let's talk about a definition of disruption innovation from Wikipedia. A disruptive innovation is an innovation that helps create a new market and value network and eventually disrupts an existing market and value network over a few years or decades, displacing an earlier technology. The term is used in business and technology literature to describe innovations that improve a product or service in ways that the market does not expect, typically first by designing for a different set of consumers in a new market, later by lowering prices in the existing market. So I want to share a kind of a spectrum continuum of analytics. The first two are looking backwards, last month, last quarter, last year. We start with descriptive, typically simplistic diagrams, pie charts, histograms. Then we move on to diagnostics. Notice that little black dot, that's an outlier. Then we move to the predictive view, and then we ultimately get to the prescriptive, which is really optimization. You may have noticed one of my books from a few years ago, Predictive Analytics. When I co-authored, I went, oh, this is really the top. And then all of a sudden, prescriptive kind of crept into the scene. Predictive allows you to do a lot of scenarios, what ifs, and so forth. Prescriptive is what is the best of the decisions to make. Now, this is a bit humorous, but also a little bit maybe sad and crazy. What this chart shows is from an article that I discovered a couple of years ago. It shows basically that there is a correlation between how much money a family spends on the wedding of their children and how quickly those children actually get divorced. And you can see that the line goes from bottom right, bottom left to top right. The horizontal axis is the amount of money spent. Low on the end, very much money on the right. The vertical axis shows how quick the divorce is at the top. Very quick, not at the bottom. So what do you conclude from this? Some people say, well, elope, Others hypothesize that, well, if the family is very wealthy, they can actually create conflict amongst the spouses. But we need to be careful because correlation is not automatically causation. So there could be other factors involved. Now, I want to put some context to a diagram that I created for the International Federation of Accountants, IFAC. They are in New York City. They're like the United Nations of Professional Accounting Institutes. I think there's about 180 global ones. In the United States, you'd have the AICPA or the Institute of Management Accountants, which I'm involved very much with the second one, a little bit of the first one. Just like in biology, where you have a taxonomy, plant kingdoms, animal kingdoms, here's the taxonomy. We've got three kingdoms: tax accounting, financial accounting, managerial accounting. What I want to differentiate here is you always calculate costs. So when the management accounting, you see cost measurement. But when the accountants do external statutory reporting, they follow GAAP. It stands for Generally Accepted Accounting Principles. It may come from the SEC or the IRS. It's typically about valuation, inventory valuation, example. In contrast, management accounting doesn't have to follow the rules. You'll see it's modeling. And basically it's used for, historically, looking backwards, past periods, budget reporting, profitability reporting, benchmarking, and so on and so forth. The predictive view is decision support and cost planning. Many of the accountants and the CPAs don't particularly like me when they see at the very bottom, I've got the value spectrum. To the left, low value added. We move to the middle, modest value added. To the far right, high value added. The value of management accounting increases when you go from left to right. But many accountants are really stuck way over in the left. That's all they're doing is closing the books and doing external reporting. Okay, so why is business analytics even needed? Well, let's kind of put our MBA hats on. How does an organization gain a competitive advantage? Could be by being first to market via innovation. Apple would be a good example. By customer loyalty, Tiffany's jewelry would be a good example. By being the low cost or low price provider, Walmart would be a good example, maybe some other. My question is, how sustainable are these for the long?
Hi there, hope you enjoyed that last clip. My name is Michael Maludis, and if you'd like to watch the full 60 minutes of that last webcast, while also gaining complete unlimited access to our entire library of IT learning, simply visit our subscribe page at greatpro.org/subscribe. Unlimited annual access is $199 per year, but if you use the coupon code LEARN2EARN, you can drop that membership fee to just $149. That's less than $13 per month for unlimited access to over 1,000 hours of on-demand career development, covering the entire spectrum of IT management best practices, including business analysis and requirements, software development, quality and testing, risk management, process improvement, project management, and even digital transformation. But your membership doesn't just give you unlimited access to our vast learning library. You also get free access to our mobile app, as well as direct access to our network of over 300 of the world's leading IT consultants, all of whom are dedicated to putting practical knowledge at your fingertips so that you can learn more and earn more. I hope you will join me in becoming a member of the Great IT Professional and advancing your career with us. And if you're on YouTube, don't forget to hit that subscribe button above so that you get notified whenever we publish new free webcasts each week of the year. Thank you for your time and best wishes for your continued success.